Hello, everyone. Welcome to today's Lunch and Learn session. At this time, we are waiting for those that have registered to enter the room. So we are looking to start at 12 for the Lunch and Learn, and then we may give it a few more moments to allow those to enter. So bear with us, but we will get started soon. Thank you. Okay, it is now noon. I do want to give maybe 2 more minutes for those that are wanting to join to get some time to enter the room. So give us just a few more moments and we will begin our presentation. Thank you.
Where is the microphone? Hello.
All right, well, I don't want to hold anyone because I know that this is a Lunch and Learn series. Therefore, um, you probably only have so much time. So I'd like to go ahead and begin today's session. Thank you for joining the Columbus Urban League, specifically the Minority Business Assistance Center that is fueled by the Department of Development from the state of Ohio. I'd like to welcome you all to kind of our second season of our Lunch and Learn series, where we like to extend some educational resources to those within our community that have their own businesses or looking to develop their own businesses. So today we have our financial coach, Miss Heather Landon, who will be presenting some useful information regarding financials within your business. Thank you.
All right. Good morning, everyone. Thank you for joining us. I love that you have taken this time out of your day to grow yourself and your business. So thank you so much for being here. And as Rosita shared today, we are going to discuss managing your business finances today. So the first topic that we are going to discuss today is budgeting. So, and the importance of budgeting. I really love to start off with a little bit of a talk track and a topic, referencing a story around that. So, in 1971, three men who had met through the University of San Francisco founded a business. And 1976, due to an act of nature, sales plummeted 25%, and they had to use a $95,000 line of credit to stay afloat. So 1976, $95,000 was a lot of money. By 1978, just 2 years later, things had turned around, and by 1981, sales were at $4.4 million. So within 5 years, they were able to turn things around very quickly. Within a decade, they were able to raise their sales up to $73.5 million. Fast forward to 2008, during the recession, they announced that they were closing 600 stores, which 10 years prior were half of the locations that they had, and 1,000 jobs were lost. By 2012, they had pivoted and done a little bit of strategic work in their business planning and had returned to the market with annual sales of $2 billion to turn their business around. If you have heard of this business and guessed it, it was Starbucks. So a lot of the things that I had just referenced in regards to this business are some of the things that we're going to be talking about today in terms of budgeting, pivoting, business planning, and understanding where your finances are, financial forecasting, things of that nature, and understanding and staying close to your numbers and how what the importance of is that when you have to cut expenses and determine what is the next plan for you and your business and how to move forward. And so sometimes you have to make hard decisions, but staying close to your business finances is one of those ways to ensure business success. And sometimes the decisions are going to give you trajectory, and sometimes it's going to scale back. But knowing where your numbers are at is super important. So the first topic is the importance of budgeting. So what is budgeting? I always like to start off with a little bit of fun because numbers are always a little bit maybe not so fun. But as many of you know, you've probably heard a lot of these comments. I'm on a budget. We're on a tight budget. And lastly, the budget will balance itself. I'm here to let you know that the budget will almost never balance itself. I've never seen a budget completely balance itself. So being on a budget and somebody saying that they're on a budget is a great thing, right? Like, you need to make sure that you understand where your money is and how much money you have and what you're going to spend it on. Being on a tight budget is also understandable. You know, if you understand how much money you have and what you're able to use that money for, sometimes things are tight. And so you're going to have to be lean with what you're spending those things on and be strategic. And so being on a tight budget isn't always a terrible thing because it makes sure that you stay focused. And then being on a balanced budget is also extremely important, making sure that you stay focused and stay on task and on goal of the money that you have anticipated making and where you're spending those expenses, all coincide with profitability and a successful business. So just a little fun to start the call. So what is budgeting? Budgeting is a financial plan for allocating resources. So ultimately, it's just everything that I just said. You're making money, you have to spend money to make money, right? And so you want to make sure that where you're spending the money is going to be the best use of those funds in order to make you money. And so putting together a budget is one way in order to ensure that the money that you're spending is making sense for you and your business on how to continue to grow and make money for that business. Some of the benefits of budgeting are that it helps you manage your spending. And so understanding what those expenses are, and knowing where those expenses are coming from and what you're going to have to spend money towards are extremely important. Know what categories that the most expenses are, where your money's going to be most spent. So sometimes maybe it's payroll, sometimes maybe it's actually your cost of goods that's going to be the most expensive part of your line item of budgeting. Those are things that you would definitely want to make sure that you're aware of and have understanding of what to plan for. It also provides direction for your business goals. So if you know that in the next 3 to 5 years or the next 1 to 2 years that you're looking to maybe open another location, or maybe you would like to, if you're in the retail restaurant industry, you want to open a food truck. You have to plan for those things, right? And so there's going to be some strategy around that, how you're going to save money to open a food truck and provide the funding that it's going to take to bring that idea into fruition. And it also helps to monitor your performance. So if you don't have a budget in place and you're not aware of where your money's going or what you're spending throughout the year, you really don't know if you're making money or not. Many times I've talked to clients and they are not familiar with if they're making money throughout the year or not. They're really just relying at the end of the year to give their expenses to their accountant and the receipts from their sales to their accountant and saying, hey, handle my taxes for me. Budgeting and understanding where your numbers are and what you're spending and what you're making throughout the year is a really important way to know if you need to increase pricing or decrease spending or a little bit of both. So that's extremely important. Sometimes when I'm working with clients, they also ask me, how should I structure my accounts? What is the best way to make sure that I know that I'm spending, that my expenses and my income are coming from the right places, and how can I ensure that I understand what that looks like? And so from my banking background, I always say that you want to ensure that you keep some of those things separate. Obviously, you should always try to keep your personal separate from your business. Your personal money is sometimes needing to be funneled into your business. Sometimes you're going to need to have your personal equity filtered into the business to help continue to fund that, especially at the beginning, right? And so you need to have a paper trail for that so that you understand how much of your own cash capital you're putting into your business to get it up and running. That equity that you're building in your business from your own pocket should be notated on your balance sheet. And if you're not keeping those things separate and understanding how much you're putting in there, that can be hard for an accountant or anybody else for them to understand where that money's coming from. So keep your personal and your business account separate so that you know what expenses are for your business and what expenses are personal and how much money you're putting in there. Secondly, an operating account and a receivable account are important to have separated, in my personal opinion. There are different and varying opinions on this topic, but from my experience and my opinion, I believe that you should have those accounts separate. And what that means is an operating account would be anything that you're using to pay expenses from. So anything you're paying your bills, you're paying your payroll, paying your rent, paying your vendors, anything where you would be paying and sending out your account information. My background is in banking and commercial lending, and a lot of times I have seen it where in particular, one time I worked with a client and they had sent out checks for all of their bills. Their mail got stolen and their account number got compromised. And as a bank, we were able to take care of that and mitigate any of that risk from their accounts, any money being taken from them. But they still had to change their account number and get new checks and go through that entire process. So that impacted the amount that their ability to receive funds timely, because they were also using that account to receive money from from the services that they were providing and being paid. So in the midst of that, they set up a new account number and they got everything switched over. And less than a month later, the same thing happened again. And so twice within a month, they had to reestablish a business bank account and reset that number up, but not only with their vendors, but also with anybody that was their client that they were receiving money from. And so that impacted their ability to receive funds and be paid. So in my opinion, having an account established specifically for clients to pay you so that your cash flow is not impacted from being able to receive money should anything ever happen to your account where you are paying people from. It doesn't stop you from continuing to operate and being able to continue to receive funding from the bills, from the invoices that you're sending out and the account that are paying you. That's super important in terms of cash flow. And then lastly, you should always have a savings account. There should always be a rainy day fund. You should always be preparing for unexpected expenses or for future growth of your business on things that you might be wanting to do in the future. So if you're looking to do another store or a different product line, you want to diversify a little bit. Savings accounts are great because you have the ability to have that set aside. Also, I know a lot of clients have tax liabilities, and so sometimes they want to have an account specifically to set that money aside for their tax payments. It might be difficult for them to ensure that they have that large lump sum of money at the end of every year in order to pay that tax liability. And it makes more sense for them to pay that quarterly or have at least the ability to put that money aside in a separate account where it's not commingled with their operating funds, so that when the end of the year comes and that expense comes due, that they have that money set aside for that particular expense. I did miss saying this at the beginning, but I will be taking all questions at the end. So if you could put them in the chat and or raise your hand at the end, I will answer all the questions at the end and I will go through those. So I do apologize that I did not mention that at the beginning, but I will be answering all the questions at the end, okay? We're going to move on here to cash flow. So that kind of goes into what I was just talking about from having a separate account for your receivables versus your operating. So the cash flow is the movement of money in and out of your business account. Cash flow is important because there could be opportunities or times that you need to understand when expenses are coming due. Large payments may be coming in or out of the account, and that you need to be prepared in order to pay those expenses. For instance, a lot of times insurance policies are due annually, and those could be a large payment that would be hard to come up with potentially, depending on where you're at in your business. And so in order to prepare for those, you would want to know that that payment is due once a year in September and be able to prepare for that. If you're seasonal, it would also be important to know that you have fixed expenses versus variable expenses. And so fixed expenses would be something like your rent. You're going to have that happening every single month. So you want to make sure you're preparing for that, even in your off season months where maybe you will not be having income coming in, but you still have those expenses that would be being incurred that you would need to be prepared for. So some of the ways that you can manage your cash flow would be to invoice promptly and follow up on overdue payments. So don't wait to do your invoicing once a month or once every other week. If you have the ability to do so, invoice on a daily basis or at least a weekly basis, so that you can ensure that your clients are getting their bills quickly. And put a system in place to ensure that you are aware of any payments that are outstanding and follow up on those payments. If you are not using an accounting software that can help you with this, where you can do your billing through there and it will notify you that bills are outstanding, there are accounting softwares that can help you do that. There are invoicing softwares that can help you do that if you do not use an accounting software system. So automation of those types of things would be very helpful for you and allow you to continue to focus on your business versus trying to keep track of who's outstanding if you're doing it in a papered method. So just keep that in mind. Negotiate favorable payment and terms with suppliers. So this would be one of those cases where, maybe sometimes your suppliers, or the people who are paying you might have a net 30 term, like that is their repayment terms, or maybe net 45, net 60. And there's the opportunity for you to say to them, if you receive my invoice and you pay early, I'll give you a 10% discount. Or potentially, if they normally pay with a check, you could say, if you pay electronic, then I will, give you a discount on your shipping, or whatever your negotiation might look like, so that you can ensure that you're getting that money quicker and in your account. That is beneficial to you because that allows you to buy your materials quicker, that allows you to pay your employees quicker, that allows you to just have that cash on hand to be able to do what you need to do much more quickly. If your vendors are not paying you fast, then that means your turnaround time is slower because you don't have money to be able to keep moving to the next step. That's just impacting your turnaround time as well. Cutting unnecessary or non-strategic expenses. So this is a great way to think about reviewing what you're really using in your business and what you're not. Think about this personally. I know a lot of us probably have all of the different subscriptions like Netflix and Hulu and who knows what else is out there. But maybe you're not even really using some of those. If you're only really using one of them, do you really need that subscription for that one show that you're watching? Maybe not. Maybe it's not that important. Or maybe, you're not using that subscription, but one time a year. Maybe there's the ability to find another way to implement that service that you're using with some other service that you're using as well. You don't necessarily need to duplicate efforts. There could be the potential that something else that you're using already has the ability to implement that same service in and mitigate having that additional service that you're currently paying for. So think about the services that you have, find out what additional services that they offer, and see if you can merge or mesh together any of those services and limit the amount of subscriptions that you have, or eliminate some of those subscriptions that you have if they're not pertinent. Build up a cash reserve for unseen emergencies. So some of these things that I'm sharing will probably sound kind of repetitive, but that's because they all intermingle. Business finances intermingle with each category. They're going to hear a lot of things that sound familiar from other things that I'm talking about. So savings accounts, just as I said before, having a cash reserve for unforeseen emergencies are extremely important. You never know if, you say you're in a transportation business, if you have a vehicle that breaks down and you can't get that repair done because you don't have the funds to do the repair, you're not only incurring that expense for the repair, which is a cost, but then you're losing out on income because that truck's out of commission for however long it takes until you have the funding to be able to pay for that. So, making sure that you have money saved up in order to cover those costs is extremely important. In my opinion, having 6 months of operating expenses would be standard in any business industry, just to make sure that you can cover any expense that you might have dependent on any unforeseen circumstance that might arise where you may have to step away from the business for a brief period of time, or incur some unforeseen emergency, as I said before, that would come up that would limit the amount of business that you're able to do or business altogether and not impact you completely. And then lastly, consider a line of credit or short-term loans to cover any fluctuations in your business, whether that be seasonal or otherwise. A line of credit is great for that, but it's also great for growth for your business. A lot of times, as I said before, when negotiating terms, the line of credit is also a benefit to you because it allows you to have access to capital to buy materials or pay employees while you are waiting for repayment from the jobs that you're applying for. So if you want to see continued growth, you'll need access to capital in order to pay employees and buy those materials and bid on those contracts to support that growth. So just a few things in order to manage your cash flow. COGS. What is COGS? So if you are not familiar with that acronym, COGS stands for the cost of goods and services. And the cost of goods and services basically just directly attribute to the production of goods sold by the company. So what does that mean? Ultimately, it's the percentage of the company's revenue that it keeps after subtracting the direct expenses, such as labor and materials from your sales. Broken down even further, what you sold minus what it cost you to sold. So earlier when I was speaking to that point of how much does it cost you to do what you do? So for instance, if you had a flower shop, you wouldn't be able to run a flower shop without the flowers, right? You have to have flowers to have a flower shop. You could sell flowers outside on the side of the street, but if you didn't have flowers, you wouldn't be able to have a flower shop. So the cost of goods and services for a flower shop would be one, the flowers themselves, jars, the paper that you would wrap the flowers in, etc. Sometimes payroll's included in that. Sometimes payroll's not included in that. It just depends on how your accountant chooses to attribute that portion of the cost of goods. Sometimes what is not included in cost of goods is operating costs, such as utilities and assets, rent, logistics expenses, etc. So cost of goods would really just be whatever it is that you're offering, what the materials cost to do just that. So if you're in transportation, it's technically just the fuel that it costs to move that material back and forth. If you didn't have fuel, you wouldn't be able to transport it back and forth. Why is it important to manage your cost of goods? As I said before, it directly impacts your gross margin. So that is what you're making after your sales from the direct expense of what it costs to do that. It also helps you in pricing decisions. So back to the flower shop example, everybody knows that Valentine's Day, the cost of roses probably doubles, sometimes triples, depending on where you're buying your flowers from, okay? It's not always because the flower shop wants to make triple on the flowers. It's also because they are getting charged more from their providers, the people that they're getting their flowers from. And it's costing more because the people that are growing the flowers are in much higher demand. And so they have to grow twice as many flowers at that time of year to ensure that they have enough flowers to provide to all of the vendors that are looking to buy the flowers because there's such a need for them at that period of time. It's supply and demand, right? So think about it with fuel, think about things like that. The demand goes up, the cost goes up. And so the cost of goods is something that you would want to make sure that you're focusing on because your cost of goods could fluctuate just the same. And if you're not adjusting what you're charging, and if you're not aware of if your cost of goods is fluctuating, you could potentially not be making or charging enough for your services. Therefore, you could be breaking even or losing money that could be left on the table for you as a profit. That is what I'm speaking to in the next bullet point about helps in your pricing decisions. You would want, if there's a small fluctuation in pricing, you're not going to go back and forth and change your price, $1 or $10 or whatever it might be every single time that there's a fluctuation in pricing. But if you're starting to see a steady increase in the price of your materials, then you're going to want to rethink your pricing structure. If you know there's going to be a significant spike, like it would be around Valentine's Day for those flowers, you're going to want to increase your price on the flowers at that point, right? But you're going to see that go back down after Valentine's Day. Is not going to maintain that. That's just something that you're going to want to make sure that you're looking and paying attention to during that time. The last part is strategies for managing your cost of goods. So as I said before, supplier negotiation. You would want to ensure that you're talking to the people that you're buying your products from, seeing if there's a way to negotiate that price. So if you buy in bulk, would they be willing to give you a discount? If you buy, ahead of time, is there a discount? How can you reduce the cost to you through buying with them? Streamlining your production processes. So you want to make sure that you're going directly to the source if at all possible. So in the example of the flower shop, if you can buy direct from the flower shop itself, the people who are growing the flowers, great, because then you're not having to pay the middleman, right? You don't have to pay for somebody else that's being the buyer and then the seller to you. But sometimes that's not feasible. Sometimes you can't just buy it direct from the source. Sometimes you have to buy from a third party in between there. So limiting the number of in between resellers is important for you as a business owner. So just trying to ensure that you're streamlining the number of people that you're dealing with and your processes from a production standpoint, that you have as little touches to your process as possible, would be really important to take a look at for that purpose. And then lastly, reducing your material waste. So if you can pack more in one box and use less packaging for that, great. If you can, say, hey, if you choose to ship everything on Fridays and wait until everything can go in one box, great. Just finding ways to reduce your expenses would be the most ideal situation. So if you're delivering things, maybe you can give a discount if people are willing to wait, where you're going to do all your deliveries in a certain area on one day. That would be ideal. Instead of having somebody delivering something every single day, you can just streamline it down to just one day. All right, and then the next topic we're going to talk about are operating expenses. So operating expenses are everything other than cost of goods. So operating expenses are your day-to-day expenses like rent, salaries, utilities, really anything other than what it costs to actually produce the product that you're selling. Knowing exactly where those expenses occur and are essential to having a good understanding of your business financials. It's extremely important for you to track exactly where the business is spending money for both accuracy and your long-term planning. Categorizing your costs is really beneficial as well. That way you can determine where the extent of your expenses are going and understand if there's an opportunity to reduce cost in areas where that might be at. So categorizing your expenses is important in overall budgeting and the overall scheme of budgeting. How can you manage your operating expenses? As I said, you're obviously going to continuously, regularly review your expenses. So I feel like I'm a little bit repetitive here, but staying close to your numbers is really the best way to understand where you're at from a business perspective. So I would say, it's definitely something that you want to look at least once a month to ensure that things are staying on track. Doing this helps you ensure that you're implementing proper controls for your expenses and that you're calculating your overall profit margins correctly. And then lastly, implementing cost-saving technologies. Like you heard me earlier talk about automation. So if there's any way for you to put a process in place where it's going to minimize the amount of touches or allow you to do something more streamlined, strategic, that is going to benefit your business and lower the cost. It's definitely something to think about. And sometimes cost-saving technologies doesn't even have to be actual platform or software. It could actually be, working with a marketing advisor or your bookkeeper. If you are best served and as a business owner that you're best served as going out there and winning the business because that's your strong suit, but following the numbers and putting in this data every day and tracking those expenses and doing the day-to-day numbers isn't really your strong suit, that's okay too. You can outsource this to a bookkeeper and have them do that. If you could make $500 in 1 hour by going out and selling a deal and outsource this work to somebody else and they could get this done in 1 hour and it would take you 5, you could have made $2,500 in that same time as it would take that person 1 hour to do this for you. So just do what makes sense for you. Know where your strengths are. What I will say is that never completely let go of everything and completely pass it on to someone else and don't stay close to your business and your understanding of what's happening. Trust, but also stay close. They're the experts in their industry, and that's great because they know what they're doing, and that's why you would hire them. But they also don't know everything about your business. They're also helping other business owners as well from a marketing perspective, from an accounting perspective. Anybody that you're hiring is going to be also working with other business owners. And so it's important for you to continue to work closely with them so that they know what's happening in your business, so they can continue to be strategic in catering their services to you and your business. If you aren't sharing things that are happening within your business with them and you're just talking to them once a year to give them your expenses and your receipts, they're not going to know that you are working on a new product line or that you are buying, getting ready to buy this equipment. Talking to them about the vision for your business is going to help them understand what you're looking to do, and they're going to pivot you and put you in a position that's going to help benefit you. Okay, next slide. So this is, we're going to talk about best practices here. So the first thing that I want to talk about is setting up good financial habits. And as I was just speaking to, that is know when your expenses increase. So as I've shared several times throughout this conversation or this talk track, I guess I should say, you want to understand when you're looking at new products or if you're looking at your existing products, and that if you're considering changing something out, what that might look like. If you are looking to add a new product line, knowing where the break-even point would be at for you, and understanding how much profit per item would happen. So there's calculations for that. There's ways that I can help you find those things out. And, I work with a lot of restaurants, and that's kind of the hardest one to calculate is food prices fluctuate fairly frequently. And so there are ways to create something to plug in numbers as food prices change to understand how much you're making or losing if the price increases happen for an item. So just staying close to when your expenses increase or your product prices increase is important. As I said, review your books once a week for yourself. If you're going to be, putting those in, understand that you should be doing that on a weekly basis so that you understand where you're at and not getting too far away, so that you know if somebody's not paid you yet, or if you know you're missed an invoice and you need to get that out and get somebody invoiced, you can make sure that that doesn't get missed and gets done. Make sure that you're getting audits throughout the year. Consider doing that. That just helps to make sure that you have accuracy and legal compliance, especially if you have employees. That would be really important from a payroll perspective. If you have W-2 employees, you want to make sure you're staying compliant from all of those payroll perspectives. And it also helps to make sure that not missing any tax liabilities, just from a sales tax or any of those other tax responsibilities that you would have as a business owner. I'm going to do a side note here that there is beneficial ownership information that is being required by the end of this year. And I will be sending some information about that out in our newsletter. But it is going through some questioning through the government right now about if it's the legality of the request. And so it's not, currently it is required, but I think that there could be the potential that it gets put on hold. But as of right now, there is beneficial ownership requirements put in place where you should be reporting who is 20% owner of more to your business. And there is a website that is in place for you to be reporting that. If you move, you should be updating that information. If ownership within your business changes, you've been updating that information. So these are just types of things that could impact your business and you would want to make sure you're staying on top of. So those are things to remember, and I will make sure I get that information out in our next newsletter. The next thing here is if you have a bookkeeper or accountant and you're relying on them to take care of your financials, sit with them once a month to understand your financial position, go through the entries that they have put in. And if there's something that you don't understand, ask them for clarity. There's the potential that maybe they put something in incorrectly and that you're catching it for them because maybe they just misunderstood what you said or put it in backwards. Sometimes, I've caught a few times where there could have been, cash basis that should have been done instead of accrual basis. And so having those conversations with your accountant about how you're doing business and how you're doing payroll and all of those things would be important so that they understand the way that they should be processing your financials. And so just ensure that you're having those conversations each month and asking questions so that they know what they should be doing for you. And then lastly, know how to interpret your financial documents. As some of you may know, there are, for our certification, income statement, balance sheet, and cash flow statements that are required. I am more than happy to help you with those if you do not have something in place already. If you have an accounting software in place, those documents would be created for you. Income statements tell the health of your business. So that tells you if you have money, where your money's at, what expenses you're incurring. So it's kind of where it tells you the buckets. That's where I said categorization of your expenses is important. That will show up on your profit and loss statement / income statement. And then the balance sheet tells the wealth of your business. So that is also important because what is listed on there are bank accounts, the amount of money that you have in bank accounts, the amount of assets that you have, such as equipment, vehicles, land, property, buildings, etc. And also the amount of debt that you have for the business, as well as the equity as an owner that you have in your business. So it will tell you what you could potentially walk away with if you were to sell your business at some point, or what you would need to pay in order to sell off your business if you were wanting to walk away and it was not profitable at that point. So just a couple things to think about when you are thinking about managing your business finances. I know that we have covered quite a bit, and so I wanted to take this time to open it up to some questions and answers. I see a few here in the chat. I don't, I guess I'm gonna ask Rosita first I don't know if people can unmute themselves, or I apologize, I'm not sure how our functionality is set up.
So, yes, if you have any questions, feel free to enter them in the chat and we will present them to Heather. At this time, we do have a question from earlier. Why is it important to separate receivables from the operating account?
Yeah, so I think I touched a little bit on that earlier, but I will definitely go back over that. So, as I said, receivables are where you are receiving money for the services that you provided. And the reason that is important is that you don't want to stop the ability to take your money, get your money from the services that you've provided. If something were to happen to your account number and somebody else had access to that, and then you had to block that account number and open a new account, you would still want to make sure that you're getting the money easily into your account and not have that compromised and have to go through the process of switching that to a new account. One of the industries, coming from the banking background that I have, one of the industries that this is extremely important for is insurance and medical industries. So if you're in home health care or health insurance, a lot of times it's very difficult to get the state and federal funding sources to get those switched and get switched quickly. And so even from a personal perspective, sometimes it's hard to get your Social Security switched over. So, I mean, no, personally, most people are not doing that and switching, having two separate accounts personally. But from a business perspective, if you have income coming from those Medicare, Medicaid, et cetera, it's hard to get that funding switched to a new account number if there was something to happen to the account number that you had it going into initially. So that's why I say don't mess with your funding account. Make sure that you can always get paid. You don't want to have to worry about where your money's coming from and having access to it. Any other questions?
I'm not showing any others. A lot of thanks from our attendees for the information that you've shared. I wanted to give it another moment to see if anyone else would like to ask any questions on these details that Heather has shared today. In the meantime, what I would like to offer to you all is some information regarding the uh, next Lunch and Learn that we will be having. I wanted to share that we will be presenting our very popular certification one-on-one boot camp. Myself and the other certification specialist, Kathy Armstrong Sapp, will be presenting details on the process and requirements. It'll also be featuring our fearless leader, Director Andrea Wilkes. And should you have any interest to joining us, it'll be 2 Thursdays from now on September 26th, again, starting at noon. And if you would like to register, I'll be including the link to do so within our chat. The information will also be presented in our newsletter, so be on the lookout next week for that information. But we hope to see you all join us, and we'll be on the road throughout this season, so be on the lookout for some in-person events that we have coming up to share the wealth of knowledge and resources that we have access to.
Wonderful. All right. Well, as Rosita shared, I think that our contact information, do we need to do anything with that?
Yes, so if you would like to learn more about our program, our services, and where you can get in contact with us. Our web address is cul.org/MBAC, which I have also included in the chat. So definitely reach out, register with our office. That way we can include you automatically in our newsletter. And then we could also offer some services by completing our intake form.
Thanks, Rosita. Well, I just want to say thank you again all for joining us. I appreciate you giving us some of your time and taking this opportunity to invest in yourselves. We hope to see you at our next Lunch and Learn, and have a wonderful rest of your day.
Thank you, everyone. Have a good one.